All right. Good morning, everybody, and welcome to another live session here on Facebook. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Glad to have everyone here. Before we get started, I just want to ask everybody out there, if you can hear me, let me know that you can hear me. Let me know that the audio is coming through fine. Once we have confirmation of that, we'll get started. James is asking, how do I get this on my computer? Well, James, if you can hear me, all you have to do is go to facebook.com, go to the VectorVest page, and you can click on the link right there on our Facebook page. Sound awesome. Thank you, Kay. All right. So once again, welcome everybody. Hopefully everyone is doing well. Hopefully everybody's excited about today's session. Today, we're going to be talking a little bit more in depth about technical analysis, looking at some candlestick patterns that you should be familiar with. So that way, whenever you're watching a stock, you're looking at its graph, you're looking at its chart, you can identify some potential opportunities to either get on board early or to help lock in more profit just by simply taking your profit when you see some weakness coming in, and all of that there. So today's going to be a pretty good session. Looking forward to it. Hopefully everybody is looking forward to it as well. Just to give a little bit or a little insight here, every Thursday we go live here on Facebook where we talk about, what's going on in the market today. We'll talk about a specific topic. For today, we're going to be talking about candlestick patterns. And then, as always, we like to save the personal fan favorite till the very end, where we'll analyze any stock that you want to take a look at and show you how you can do so in less than 20 seconds. Also, if you are new and you want to get started with the app, you want to set up that subscription to join the app and take advantage of the power that it can provide for you. In the link in the title section, it does have a link there you can click on, download it, and get it going right away. Welcome everybody. Hopefully everybody's doing well. Once again, if you're just tuning in, I see a lot of people just now starting to come in the room. My name is Patrick France. I've been here at VectorVest for over 9 years, coming up on 10 years here very soon. So I'm glad to be with you guys and glad to help you guys understand not only the VectorVest Stock Advisory app, but also trading in general to help you become, better traders, better investors, more successful investors. Because that's our goal here at VectorVest, is to help people become financially independent and save themselves, a lot of headache and stress that comes along with managing your retirement portfolio or trading as a living even. I'm really excited about today's session. I will have a poll for you guys, so your guys' input is going to be crucial here for next week as well. So make sure to stick around for that as well. Also, if you're new or if you've been here for a while, regardless, don't forget to always hit that like button. Go ahead and like the VectorVest Facebook page. Turn on notifications so you get notified every time we go live. And make sure to share this video so it helps you, helps your friends, helps your family, helps me, helps everybody. So if you haven't already shared this video, make sure to get it out there. Get new people looking into it because we have a lot of good things coming down the pipe for our Facebook streams here. And so the more the merrier, and the more people that join, the better it's going to be for everybody. So with that, let's go ahead, jump into what's going on here today, and then we'll start to take a look at other things here as well. So as we can see right now, the market is one tick into the green. Therefore, we're mildly bullish. Therefore, VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. But let's dive in a little deeper here. So we go down to the color guard. The color guard is where we really analyze the overall market and get the information to help us understand what's actually happening in the market today to see if it's a good time to be buying or not buying. So the first thing we always take a look at is the price, which is the price of the VectorVest composite. Now, the price of the VectorVest composite is an arithmetic indexed average of all the stocks we track for that specific market. Today, we are going to be looking at the U.S. market, but we do have some upcoming news, hopefully, for everybody here that's tuning in from other markets around the world. So you don't want to miss out on that. Make sure to turn on those notifications so you keep up to date with that, because we have a lot of new changes coming out in the near future here for you guys. So the price, simply looking at technical analysis, essentially, is the price of the VectorVest composite, or is the market moving higher day over day, week over week? If it is, we'll see a green light there. If it's moving lower day over day, week over week, we see a red light telling us, just like a traffic light, slow down, stop. all of that. Stop buying, not stop, getting out of your positions, but simply stop buying for right now at least. And then yellow just shows some cautionary signs right now, or caution, in that we should, some days we'll go through and buy something. Some days we'll simply hold off from buying and wait for a better day. After the price, we then look at the RT, which is the short-term price trend indicator. It's cast on a scale of 0 to 2. So above 1, short-term trend of the market is up. Below 1, short-term trend of the market is down. The next one is the BSR, or buy to sell ratio. So each and every day we give a buy, hold, and sell rating on every single stock that we track in the market. And we use that ratio between the buys and the sells to get an idea of whether the market has some strength to it or the market showing signs of weakness. So if there's more stocks with a buy than a sell, the buy to sell ratio is going to be above 1, and that shows strength to the overall market. If the buy to sell ratio is below 1, that shows that there's more sells than buys in a database, or more stocks not participating in the market, which would indicate overall weakness in the market. And then the average of these three indicators are comprised daily to come up with our MTI. Now, as you guys know, and anybody here that goes on to Glenn Tompkins' streams on YouTube knows the saying, keep your eye on the MTI. So the MTI is cast on a scale of 0 to 2. It's looking at the underlying trend in the market. Above 1, underlying trend is up. Below 1, underlying trend is down. Now, there's always a level that we note. 1.6 or greater shows the market's generally looking for a top. And then 0.6 and below shows the market's generally looking for a bottom. 1.62, we're still looking for that top here in the market right now. And then after that, we then get the trend column, which is just showing two parts of the trend, the short-term or weekly trend, and also the underlying trend. So the first part, looking at the price, comparing it to 5 days earlier. If the price is higher than it was 5 days earlier, the primary wave is going to be up. Lower 5 days earlier, primary wave is going to be down. Second part, just looking at the MTI. Once again, MTI above 1, the underlying trend is up. Below 1, underlying trend is down. You'll notice the theme here at VectorVest that we try to keep things simple for you guys. If you can remember above 1 is good and below 1 is bad, 98% of all the VectorVest indicators are going to make your life a lot simpler here then. And then finally, we get the calls column, which stands for our confirmed calls. Now, our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. Right now, you can see we still are in a confirmed up situation. So for you long-term investors, still in uptrend, therefore good signs. Now, every single day or every single week, we talk about the advanced declines. And as we talk about it, we look at, okay, do we have a buy opportunity at the top? Well, right now, it's saying mildly bullish. We advocate buying safe, undervalued stocks that are rising in price at this time. But for confirmation, one of the things we like to look at is at least twice as many stocks participating in that uptrend than not participating. So we look at the advanced declines and we look for a 2-to-1 bias. Right now we can see 63% of stocks are moving higher, 26% of stocks are moving lower. So we do have over a 2-to-1 advanced declines bias, telling us that if we really need to, buy a stock today, if you're really itching to buy a stock, you could potentially pick up a stock or two to, fill some empty holes in your portfolio right now. And then we get down to the major indices where we see the Dow, the NASDAQ, the S&P all up nicely here so far. VectorVest Composite, which gives us a better representation because it's not just looking at the Dow's 30, the NASDAQ's 100, or the S&P's 500, but it's looking at about 8,200 stocks in the U.S. market each and every day. So as we can see, all the major indices are up. The VectorVest Composite is up. So today's looking like a pretty good day so far. AK is saying it's a lot to remember. Hey, and that's a great segue. If, you're ever trading in the market, you're using the app, you don't have to worry about remembering all of this because right at the very top, you have the market guidance videos. Every single night in about 5 to 10 minutes, we'll recap all of this information for you. So that way, you get the answers you're looking for quicker and you don't have to try to remember every little caveat or every little in and out of the program because we'll wrap that up for you in about 5 minutes long in the daily color guard report. So if you're new and if you're just getting started, or even if you've been here for a while, and really not understood what that's all about, I strongly urge you to watch that video on a nightly basis. Hashim's is... and all the indexes are dropping. Yeah, I mean, you can see some softening from that big open that we had earlier. Right above me, actually, speaking of that, you can see the VectorVest 7 desktop platform, which comes in real time as well. This is a question that comes out every single week. If you want real-time data to the mobile app, you do have to have the real-time desktop application. And if you're interested in that, just give our support a call. They'd be glad to discuss it, help you out, get you started with it, all of that. Also, before we get started, everything that I'm going to be talking about here in the app today is based upon the premium version. So if you're on the light version or any of those, some functionality may be different, but if you want to upgrade or get back into the premium version, you can use the link in the description of this video to help you get that reactivated there. All right. Is this not on YouTube? No, Hugh. This is on Facebook. Let's see. My video is still from the 26th of June. And let's see. The 26th of June. Not sure why you're seeing the 26th of June. That's last Friday. Unless you're talking about the weekly special presentation, which is done every single Friday. It goes Friday to Friday rather than every single day. The daily color guard report is going every single day. The weekly special presentation is going day to day. All right. So with that, let's go ahead and real quick, I do want to add something here. I'm going to add a poll to the chat there for you guys. And there you go. And with that, that's going to help us discuss what we're going to talk about next week. There's a few different technical indicators. Check out the poll. Go ahead and cast your vote in that. Whatever you guys vote for is the number one. That's going to be our topic of discussion next week. So now you guys have that out there. You can take advantage of it. Go ahead, put your votes in throughout today's session. At the end of it, I'll wrap that poll up, and that'll be our discussion for next week. So your guys' input gets to choose what you want to see next. All right. So with that, there's a few candlestick patterns that we're going to discuss here today. One of the things before we get into looking at the patterns is going to a website you may not be familiar with, but I found it very early on when I started working here. Great website to use. It's called candlesticker.com. You can see it at the top here. It's by AmericanBulls.com. Great source. So if you're new to learning about candlestick patterns in general, this is a great site to use. I used it when I first started learning, but there's a couple of them here that we're going to identify. We're going to talk about a couple of bullish patterns. We're going to talk about a couple of bearish patterns. So I wanted to point this out to you guys first and foremost to give you guys a free source out there that you can use to learn about other patterns here if you're interested in them. But what we're going to talk about, the first one we're going to look at today is the bullish hammer. Now, a bullish hammer is a great reversal pattern. So essentially what we're looking at here is you're seeing, the market in a downtrend shown by those three candles there. But then all of a sudden it gaps down, goes even lower, hits a new low. But throughout the rest of the day, you're seeing price steadily rising coming off those lows, indicating that people are buying off of those lows, which is a strong sign that the stock's going to reverse and giving you a good entry at a low point. It tells you even, some ideas of where to set your stop losses if you're using this kind of a pattern. So that way you can get an idea of, hey, I can get in early. I can be aggressive. Here's where I should put my stop. If it breaks that point, I'm out, but at least I get in early and have a great opportunity at a nice gain. So we're going to look at a few of those here today, but that's going to be one of the first candles that we're looking at. Now, if you're new to just candlesticks in general, let's go over how a candle is developed. So first off, a candle has an upper wick, typically a lower wick, and then the body. The body is created by the open and closing prices of the day. So if, for example, you see, let's go into the graph here. Let's go back into VectorVest 7, or back into VectorVest. Go to the VectorVest composite, and just look at a small sample size here. Let me switch this for you guys to make it easier to see. All right, so we'll take, let's say, this candle right here. You can see it gives you 4 data points: an open, high, low, and close. What we're looking for when you see the open green candle, the green candle just simply means it's higher than the previous day by the close. A red candle means it closed lower than the previous day's close. So that's how you get a red or a green. Then the body of the candle is made up by the open and close. And then the wick is made up, or the upper wick is made up from the high point for the day. The lower wick is made up from the low point of the day. So with that, it really helps you out in identifying what's going on, the buyer mentality, and understanding, the crowd mentality going into the market. So as you can see for this day, you opened at the bottom of that body there at 41.63. The price rose all the way to the high. Let's move that out. At that very little top right there, you can see it went a little bit higher for the day than where it actually closed at. But by the time it closed higher than where the price opened at. So because it went a little higher throughout the day and didn't close at that exact high, you have a little bit of a upper wick, if you will. But because it's open, that indicates that the price opened at the lower part of the body and moved higher that day. One of the best analogies, if you will, is opening your blinds or opening a blind to your windows. If you're pulling the blind up to let the sun in, you're opening it up, so therefore the candle is open, or you can see through it. Now, if you're closing your blinds, meaning you're bringing it from the top down, then you're closing it, you can't see through it, and that's how you get a closed or a filled candle, if you will. Like you can see here on the 28th, you can see here, you can see here. Typically you don't see closed green candles very often, but they do occur. They are more rare, if you will. Just like the inverse, you don't typically see open or non-filled red candles. So those are typically rare occurrences. Typically when you see a green candle, it's going to be non-filled, and when you see a red candle, it's going to be filled, but not always. All right, so now that we're all on the same page, we have a little idea of what a candlestick is showing. Let's go back into it real quick. Let's go back and take a look. So what this is showing on the bullish hammer, the price opened up at that, or at the middle of that candle of the body, the low point of that body, moved all the way down. But then throughout the day, people started buying into that, or buying into the stock or whatever you're looking at, moving it higher. And by the very end, it closed above where it opened at, and well off of those lows. That is a great indication of some strong buying going into that stock, and a really, really good reversal pattern when you notice them. Closed means the high was lower than the start. So closed means just like you're closing your blinds. Closed means that the close was lower than the open. So you're closing your blinds, you're going down. Hopefully that explains it there. But so getting into it, bullish hammer is one of the key patterns you can identify for showing a reversal in a downtrend. Well, market was moving down for a while. There you go. You can find these kind of patterns at those lows, and especially with the market being overbought, we are going to talk about some bearish patterns here as well today to identify, when the market is getting top heavy and when, you may start seeing the market pulling back or a reversal for the market selling off. But also we want to cover both. So we want to cover both bullish and bearish here today. Another pattern that we're going to be looking at is a bullish engulfing. Now this requires two candlesticks rather than just one. So this is a little bit more advanced, but still very easy to identify for regardless of, how long or how much experience you have in the market. So essentially a bullish engulfing is looking at the black candle, which is a red candle. You see it's filled right there. But then the next day you have a big up day that engulfs the previous down day. So the whole body, the open to close, covers the whole entire previous day's down day in the candle. This is a great reversal sign. It shows a lot of buying, a lot of strong buying, a pretty strong reversal sign as well. So this is another very popular indicator or very popular pattern to keep an eye on here. So those are going to be the two key ones that we look at for bullish patterns. We're also going to be talking about dojis, which are more of a weak reversal sign. but still something to keep an eye on when you're looking at your stocks. But then we're going to get into bearish patterns here, and we're going to be talking about the reverse of that bullish engulfing, so a bearish engulfing. Therefore, you have a nice steady uptrend, a big up day, but the next day after that big green candle is going to be a down day that encompasses the whole trading range of the prior day. So bullish or bearish engulfing, and then a bearish shooting star. We talk about it a lot here, in our weekly streams, but essentially you have a nice steady uptrend, and then just the reversal. You have price moving higher throughout the day. It hits that high. People see that, not confident that it's going to continue to move higher. So you see a lot of people protecting protecting their profits, which pushes that price lower and closes towards the low of that trading range. So these are going to be some of the key patterns we look for here today. And especially when we're going through stocks that you guys want to take a look at. We'll look at the candlestick patterns, see if there's any patterns that, we notice as a group together. And so let's go ahead. We'll jump into the app. And while we're taking a look, just kind of curious, for everybody out there, what are your favorite, candlestick patterns? Are they ones that we've already mentioned? Are they ones that, we haven't mentioned that you keep an eye on? What kind of patterns are you guys looking at typically, for anybody who, is very chart focused, let's say, or even not? So let's go ahead, jump into the watch list section. I got a few stocks right here that I want to start taking a look at. First one, PRPL. Go into the graphs. We'll go to a 1 month. And we'll take a look. So market is at the top. Market's been rising for quite some time. We can see the stock has really been moving sideways over the last month with a little bit of an uptrend. But then look what we have forming as of today. Now, if you guys see this, would this be bullish or bearish? Let me know in the comments. When you see this, this is a bearish engulfing because you have the up day here. The next day is encompassing the whole trading range from the prior day inside that body. So it's engulfing that small green candle prior to it. This is a bearish sign. If you get followed through the next day, especially if the markets continue to pull back a little bit, this could be a great opportunity to take advantage of for the bears, or for, a put option, shorting, some way of taking advantage of the down market here. There we go. I see a lot of people chiming in. Bearish. Exactly. Awesome. Glad to see everybody's awake and paying attention. Exactly. You guys are the best here. All right, so we have PRPL. You have this nice steady uptrend. Look at that. The stock's been steadily rising. Look here. Right here on the 25th. Let's go ahead and get it marked. So the 28th, excuse me. You have a nice steady uptrend forming. Going into that, and then all of a sudden, you have the shooting star where it rises, starts selling off, and then closes towards a low, followed by a downtrend, followed by a pullback. These are short term, so these are great for short-term trading. Can help you, identify some potential reversals, times you may want to take your profit, and then, keep an eye on it to get back in later. So you have the reversal there, pulled back, took right back off. But now all of a sudden, the stock's starting to move even forward in time. And now you're getting a bearish engulfing, which is telling us if you're still in this may be a good time to lock some of that profit in. Be careful out there. So Jason, if you have questions, specific questions on that, just give our support a call. They can spend more time with you on pricing and all the different features. Unfortunately, I don't have a lot of time here during these sessions, to answer those specific questions. So just give our support a call. They can help you out. I wasn't trying to ignore you, just saw your questions coming in, but hopefully that answers your question though. Just give our support a call. They can go over all that one-on-one and make sure they cover all the questions you have there. All right. So PRPL, bearish engulfing. There we go. Next stock, EBS. So it gapped down. You saw a nice steady run recently, but then all of a sudden it gapped up, starting to show some weakness coming in here. Is this a good time to take your profit if you got in on those lows? You saw some potential opportunities here. Would this be a good time to get in? You had, I know we're not going to really talk about this, but you had a harami down here at the lows, capture that run, and then all of a sudden you're starting to see it, a spinning top, if you will. This is telling us, hey, we see some potential weakness coming in. The stock's not really exploding after the gap up here today. Maybe if we have a decent gain on it, maybe we should consider taking some profit. Maybe we should consider tightening up our stops at minimum here. So once again, these candlestick patterns are going to help your success by not only identifying some potential reversal times, but helping you, identify points that, hey, you may want to tighten up your stops. I may want to make sure that if I'm in on a good stock that I've made a lot of gains on, I may want to just take some of that off the table. There's nothing wrong with that. You can never go broke taking profits. So that's what today's session is all about, is helping you identify ways of, getting out a little earlier, getting in a little earlier maybe, so that way you're locking or maximizing more of that profit that you have. There you go, Angel. Exactly. All right. So we have that there. Let's go take a look at Snap. Snap, what do you have here? The stock was running nicely, but then all of a sudden at that high, let's zoom in a little bit. You have a nice big green up candle just to a new high. And then all of a sudden, there's your big green up candle to a new high. Next day, what happened? Stock moved up, opened up higher than where it was trading at the prior day, but then came tumbling down. Everybody was locking their profits in at that point, and that's what creates that bearish engulfing. So you saw some weakness coming in there. Snap is one that I've seen a lot of people ask about over the last few months, so decided to put that in here. You see that bearish engulfing coming in. Stock tried to make a recovery, but then all of a sudden today, you have another bearish engulfing forming, two bearish patterns in a little over a week's time. If that's not a warning sign to say, hey, I've had a great run, I may just need to, move to the sidelines right now, I don't know what else could be. All right, next one, PZZA. So you have the hammer at the bottom, which is a reversal. You have this small downtrend here over the last few days. You have a hammer showing a lot of buying coming into that $76 price range, blasting that price up, closing higher than where it is trading at most of the session. And then all of a sudden gapped up the next day, giving you follow through. But then today you're starting to see, an inverted hammer or a hammer here at the top. So you're getting a little bit of indecision, a little bit of mixed signals. As we talked about prior, when talking about 4 key tips to know when to sell, when you start to see this indecision or volatility, if you will, that's usually a sign that sentiment is starting to change. So you've had a great run in Pizza Hut or Papa John's. It's gone all the way from 50 a month ago or 3 months ago to a high of about 85, 86. Great run, especially if you're a short-term trader. But this is a time when you see this indecision showing and some sideways action, some more volatility coming in. It tells us, hey, maybe we should consider tightening up our stops. Maybe not sell it right now, not right away, but consider tightening up our stops. So if things get ugly, we're out, we're locking our gain in, can't go broke taking a profit. All right, so those are some of the stocks that I had just for examples of what we're going to be talking about here. Let's go ahead. Another one that I found when I was looking at, preparing for today. We have Adobe. Let's go ahead and take a look at Adobe's graph. Adobe has a lot of key indications that tells us, hey, maybe we should consider taking our profit here. So Adobe, for a short-term trader, you had a great run. Even for the last, 6 months from that low back in March, you've had a great run. You've gone from 270 roughly all the way up to 450, almost doubled in about, 3 or 4 months here. This is a stock that, a lot of people ask about. We've talked about ourselves quite a lot here. Well, Let's see how we could take advantage of it using candlestick analysis. Stock was in a downtrend like everything else out there. Then all of a sudden, what day was this? The 18th of March, a few days before the official lows on all the major indices. You see a nice hammer forming, steady downtrend, huge lower wick, and then it came back telling us everybody was buying it up at that 260 level rate, or raising it back up, making a great entry point for you. You got confirmation the next day where you had a higher movement the next day. If you didn't get in on that first day, got in the second day when you had follow through. Well, got in at 260. All of a sudden, stock just keeps running, keeps making you money. Can't be happier than this. And then you get what we call a doji here. A doji is when the open and closing prices are almost identical. That is a weak reversal, so it's not necessarily, the strongest reversal sign that says, 9 times out of 10, it's going to reverse tomorrow. But it's definitely a weak reversal sign and giving you an early warning sign to say, hey, maybe I should keep a closer eye on this right now. Well, what happened after that? Started pulling back. Granted, it ran up basically at a double top recently. And now, as of today, it's forming pretty much a doji again right now. So telling us that we're struggling to get past this high of around 440 a share. And if you're in it, you've had a great run all the way since 260, 270. Why not, why put that much at risk when you have that big of a gain? Why not go ahead and tighten up your stops or lock some of that gain in? Once again, you can never go broke taking profits. And this is the power that candlestick analysis can help you with in identifying times that, the run may be starting to change or the sentiment in the stock may be starting to change. And these can work both for up and down markets. So that's why we want to cover it, to help you guys become better investors, more successful investors, and help get better get more precise with your entries and exits. Now, if you guys have been enjoying today's session, make sure to hit that like button. Don't forget to share this video. Get that out there because this is the kind of information that can benefit anyone. So friends, family, most likely they're trading, they have their retirement accounts, they're investing in the market. This kind of information is the stuff that, can really change a person's life, if you will, by opening up a whole new world of ways to help them become more precise in their entries and exits. All right, so with that being said, what we're going to do from now, if you guys have any questions on that, feel free to let me know. If you have, questions on certain candlestick patterns, after today's session, don't hesitate to give our support a call. They can help you out. But once again, shout out to candlesticker.com. It's a great free source to help you out and identify candlesticks if you want to look for, more advanced patterns. They have pretty much anything and everything you could think of there. All right. So let's see. All right, I'm looking at the results so far. It's still not over. If you haven't voted, make sure to vote in the poll for what you guys want to see next week. This is all going to be up to you guys. Right now we have the MACD at 26%, moving averages at 29%, RSI coming in right on its tail at 28%. So it's pretty close. If you guys haven't voted, go ahead and vote because this is going to be up to you on what our sessions are about next week. So don't forget to vote. So with that, let's go ahead, jump into your stocks here today. And we're going to do, so that way we have more time for your stocks. We're going to do a little bit more in depth. We're going to take a look more at, their charts and that kind of thing. Not only do the analysis, but take a look at their charts as well. See if we can identify any patterns for you guys. All right. Let's go ahead. Sam coming in. Can you see ZM for candlesticks? Sure. ZM. All right. So real quick, before we get into the charts, let's go ahead and do the analysis here. So we use these 4 indicators to make our lives a lot simpler. All 4 of these indicators are going to be cast on scales of 0 to 2. Once again, above 1 is good, below 1 is bad. RV at 1.04 tells us is looking at the long-term potential over the next 1 to 3 years. As you can see, just barely above 1 tells us we see, it has the potential to just slightly outperform a AAA corporate bond. Looking at the RS, the relative safety. Now, this is more of that risk factor, the safety factor, whichever way you want to look at it. Above 1 shows us that there's less risk associated with it. Below 1 tells us that there's more risk associated with it. And then we get the RT, which is looking at the short-term price trend of it here. And this is looking at, not only is the stock in an uptrend or a downtrend, but also the magnitude of that uptrend or downtrend. So above 1 tells us in an uptrend. The closer to 2 it is, tells us how strong of an uptrend that is. And then all 3 of these indicators are combined to come up with our master indicator, VST, standing for value, safety, and timing. Now, this is unique, something you're not going to be able to find anywhere else, because what this is combining is both fundamental and technical analysis all into one. Something that, nowhere else out there does. You can find a lot of places that talk about just technical analysis, or a lot of places out there that just talk about fundamental analysis, but nowhere gives you the overall picture from both levels or both perspectives into one easy to read indicator like VectorVest does. So 1.41, it tells us it has decent fundamentals and really strong technicals right now, so therefore the stock is favorable. I want to see stock to buy. We've talked about a few different options. There's a lot of sessions that we've done on identifying what stocks to buy. But one thing to be careful of with that, and something that, we preach here time and time again at VectorVest. Market timing trumps any individual rating on a stock. Just because a stock has a buy rating doesn't mean you just go out and buy it. Look at the homepage. That's why we always start off with the homepage in the app every week, and we don't just go right into, the ratings of a stock. As we saw, we do have that, if you're itching to buy a stock, we've shown that, today would be a decent day to buy, but we also talked about the longer term, that the underlying trend of the market is at a peak. We're starting to see the market top heavy or looking for a top. So if you do get into a stock today, be mindful of the current situation and make sure to, set more realistic goals for yourself. Don't try to blast or try to shoot for the moon when the market's more top heavy than, or when there's more downside risk than upside potential in it. Simple as that. All right. So we talked about that. Let's get into Zoom. Let's look at the graph. Go ahead, swing this over here. So we have a nice steady rise in price from bottom left to upper right. RTs staying above 1. Everything's looking pretty good. Let's go ahead, zoom in. Let's say 1 month. All right. So anybody notice any patterns with this? There's a couple that I noticed. For example, right here at that high, you have the next day bearish engulfing. You got follow through here. Okay, yeah, it's pulled back, but it's still at a double top essentially. It hasn't really gone any higher than that previous high. So we're just moving sideways. We're not really in an uptrend anymore. We're just more of a sideways trend right now. Right now, today, it's, moved higher, pulled back. It's really trading as a doji almost, or at least very close to it. So we're going to have to wait for the end of the day to really identify that doji. Doji, once again, a weak reversal pattern. So you have bearish engulfing, sideways movement, and then another reversal signal coming in. So that's one sign that, hey, it may be due for a temporary pullback right now. Let's see the next one. Can you break down OVID? Sure, Joshua. OVID, poor long-term potential, a lot of risk associated with it. So this tells us, based upon last week's session, this is a speculative stock. With being a biotech, yeah, we can see why there's speculation. But because that speculation, it's a hot momentum stock currently. People are buying it. You see a lot of wild swings. So therefore, the RT 1.75, really strong uptrend. If you're a speculator, somebody that takes advantage of news-driven stocks, therefore the stock is favorable. But if you're somebody who, likes to have more fundamentally sound companies, you're going to simply pass on this one. If we take a look at the graph, right now we can see on a 1 month, You had a couple of days of up move, but overall the stock's pretty much flat here. Let's go 3 months. Here you have the bearish engulfing, reversed, moved sideways, moved a little lower and sideways. Then all of a sudden you had a hammer at the bottom, which is a reversal sign telling us that you can expect to see it explode, followed by confirmation the next day, giving you this run here. Very short-term trade once again. And now stock's just moving sideways again. So there are some patterns to identify, but overall, this has, the ability to move higher or lower any given day. Candlesticks on this very short-term basis can actually help improve your entries and exits. So yeah, today's session definitely going to help you out with this one. Also, what we're talking about here is on end of day looks, but if you're somebody who's a day trader, these types of patterns can help you greatly increase your awareness on when to get into a stock, and also help you greatly on when to protect your profit on a stock as well, on an intraday trade as well, or a day trade, if you will. So, wanted to also point that out, since we have a lot of people always asking about day trading and all that. This kind of information can be used for that as well. Microvision, sure. MIC micro V. There we go. MVIS. So Microvision, poor long-term potential, a lot of risk associated with it. Timing, yeah, it's in an uptrend, but not the strongest one for being such a speculative stock. Therefore, the stock overall is not favorable. As you can see, it's $1.52. Lower dollar stocks tend to have a lot more risk involved with them. Sam, it's in the poll that should be in the comments there. That's where you can go ahead and vote. So looking at the graph right now, you can see some selling pressure, not really a candlestick pattern, but some selling pressure here shown by the tall upper wick, but also, a lot of just indecision, because you have a tall upper wick and a tall lower wick as well. And that shows that, a struggle between the bulls and the bears, going back and forth, if you will, when you look at that. So a lot of indecision that day. Well, started pulling back a little bit. And now, yeah, we're trying to recover somewhat, but we're still not close to those highs right now. So yeah, that's what we're seeing just on a short-term basis with Microvision. All right, one moment here. There we go. VXRT. Once again, speculative stock, strong momentum, so therefore the stock is favorable overall, but definitely a speculative play with the RV and RS below 1. Tells us poor long-term potential, a lot of risk. All right, so this one. Right here before the blast-off day. What is that? Let's see. Let's see who can answer that one. That's right. Bullish engulfing. That big body candle was engulfing the prior day's activity. What happened the next day? Started moving even higher. Big explosive day from, $3 all the way up to $6. Almost doubled overnight. Next day, gapped up, ran up to $14. Stock went from $2 4 days prior to 14 at a high. Yeah, you're going to expect to see a lot of people take their profits. This would be, in a sense, a reversal sign. It's more of a inverted hammer or a shooting star, if you will, because you're starting to see, the price was running up. People were speculative. They just at least doubled their money overnight, essentially. Therefore, everybody's going to lock their profits in, pushing the price lower. You can see it opened up at the high, or opened up at the middle of this price range, moved up, and then by the end of the day, came all the way back down and closed at the low. Now, if you were here earlier, if you see a closed green candle, this is a very rare sign, but it's a sign of weakness, if you will. So there's your very rare opportunity to see a filled green candle. Then you had followed through the next day with the down day, try to make a little bit of recovery, but not much, and then continue to move lower. So this is a sign you see quite often. 9 times out of 10 when you see this kind of a pattern, that's all speculation driving that price higher, and usually the stock comes tumbling back down in the very near future after that. SHYF. So this one, good long-term potential. A little bit more risk to get to that long-term potential, however. Nice strong momentum behind it. Therefore, the stock is favorable. Looking at it, just going to look at most recent, not a whole lot of, or no candlestick patterns showing as of today. But definitely one, definitely some opportunity to keep an eye on moving forward. If you're looking to get a trial for the desktop, just give our support a call. They'd be glad to help you out, go over your options, talk about, what would be best for you. Can we see Workhorse? Sure. If you don't know the ticker symbol, that's okay. Just start typing the name, Workhorse Group right there, pulls it right up. So, speculative stock, poor long-term potential, a lot of risk associated with it, but the timing's pegged out at 2. So therefore, if you're, a momentum trader, great, this is a good stock. If you're a fundamental trader looking for, a little less risk, probably going to pass on this one. But you see, no wonder it's up 15% here today. And a lot of it came over the last week or two. So we look here. Anything noticeable at the bottom of that run? Not really. Right here, you did have a bearish engulfing right there, and then blasting off to that new high. So still moving higher. Keep an eye on the candlestick patterns. Take advantage of it while it continues to move higher, but don't hesitate to lock your profit in on that, especially being so, such a speculative trade. Let's see. TTOO, sure. TTOO. So once again, a speculative trade, $1.44 a share, tells us this stock has no real decent fundamentals to back up a higher price point. Therefore, it has poor long-term potential, a lot of risk associated with it. Timing, yeah, it's in an uptrend, but not enough to outweigh the additional risk and the poor potential in it. So therefore, the stock is still not favorable right now. You can see it's down over 4%, 4.5% here. A lot of volatility, a lot of speculation. Here's the reversal sign after that nice little run. Here's another clear reversal sign if you didn't take your profit yesterday anyways. And then getting followed through here today. Let's see. EQX is one of the highest rated stocks on the VectorVest. Yeah, it's starting to come today. Let's take a look at it, Taylor. EQX. I wouldn't consider down just 1% crumbling by any means, but this one, great long-term potential. It does have some additional risk associated with it, which is what the RS is showing us. So it is more of an aggressive stock, not a buy and hold long-term, but a trader stock, if you will. Looking at the timing, 1.75. One day doesn't make a trend. It's still undervalued here. Overall, the stock is definitely favorable. Looking at it, this has been one of our top stocks for a while. Over the last 3 months, it's gone from $7.20 a share roughly all the way up to almost $12 a share. It's not a bad run. If you're just getting started, yeah, this stock, looking at the candlestick patterns, you can see that it's definitely looking overbought. But if you're somebody who's been using the app for a while, you've probably been into this for quite some time. You probably made some great gains with this. This is why, it pays to have VectorVest all the time, and not just, when you think the market's, overbought or oversold, but all the time, because there's these great opportunities that if you're not, checking it out on a day-to-day basis or even on a week-to-week basis, you could really be missing out on quite a lot and missing out on some great opportunities there. So yeah, why it's down 1% here today, over the last 3 months, it's gone up almost doubled. Over the last 6 months, yeah, it had some pullbacks, but overall it's gone from 8 to 11. So still, even if you sat through that big sell-off, you still had a great run. You're still making good money on it. So yeah, definitely a good stock. I wouldn't consider down 1% to be considered crumbling. Let's see. Do we do over-the-counter stocks? Yes, we do. And if there is a stock that you don't see in the database that you want to have added, all you got to do is shoot us an email to support@vectorvest.com, and they can get those in there for you. Because we add new symbols every single week. I believe it's every Thursday after the market closes. I could be mistaken. But yeah, we add new symbols once a week. So if there's a stock that you guys don't see in here that you want to have added, just shoot us an email with the ticker symbol. We can get it added for you. All right. CGX. Let's go ahead and take a look. Not finding that one here. ABT. Abbott Labs. About average long-term potential. Good solid fundamentals though, so less risk associated with it. Stock's moving sideways, so right now it's more of a hold pattern. Stock overall is favorable, but we've seen better out there so far. Can we check out AZUL? Sure, AZUL. Oh, wrong one. There we go. Also, folks, if you're not already subscribed, once again, in the description of today's video, there's a link. You can click on that, download it, get started right away with the same everything that you're seeing here today. Do this analysis on your own, on the go, whether you're at, you're traveling, you're getting exercise outdoors away from everybody else, wherever you're at. This is a great on-the-go app that you can do, or you can take with you and do the same kind of analysis right from the palm of your hand. So if you're not already subscribed, definitely click on that link, download it, go for it. Seeing is believing. Put it to the test. All right, AZUL. Good long-term potential. A lot of risk associated with it, though. You do have the short-term trend of the stock is pretty much flat, so not really making you money, not really losing you money right now. Overall, the stock's about average, a little bit better than average, but not by much. All right, so here, a doji. You saw a lot of selling pressure just by looking at that candlestick after a huge run. The next day, follow through to the downside, telling you if you didn't take your profits when you saw this forming, this is the last chance you have before it keeps going lower. Well, what did the stock do? It's been drifting lower from about 16, just hit a low of almost 10, just a shy off of 10. Now it's at 12, but you're still down $4 a share, from the follow-through day even. What is that? About 25% roughly? Nobody wants to sit through that. All right, let's go. Everyone's saying, should I put my buy order at the close of the bullish engulfing candle, or should I wait for confirmation? So it depends on your risk profile or your risk tolerance. If you're really aggressive, you don't have to wait for confirmation. If you want to have, a little bit more comfort that, there's some follow through to it, yeah, wait for confirmation. Personally, I'm a fan of waiting for confirmation, but different strokes for different folks. You're giving up a little bit of reward potential, but you're also reducing that risk factor as well. So, it really depends on your personal risk profile, on whether or not where you should put your buy order at. You could also use buy stop limit orders. Those are a great way as well. So, depends on personal risk profile. All right, let's see. Let's do a couple more, and then we'll start wrapping it up for today. Let's see. LNG, good long-term potential, a little bit more risk associated with it. However, you have a nice steady uptrend. Overall, the stock is favorable. Reversal here since that point, it hasn't come back. And now all of a sudden you're hitting lower highs but higher lows. If anybody's a fan, or if anybody's a Jockey Club member, you're gonna probably be familiar with this. But right now we do have some channeling, some consolidation, typically known as what I like to call the wicked wedge, where you have lower highs but higher lows. Wait for that breakout of that consolidation. That would be, a more confirmation or more confirming signal than just trying to take advantage of this sideways up and down action. All right, and one more. Let's do let's see, ECOM. ECOM. Great long-term potential. A lot of risk associated with it. Nice strong uptrend. Overall, the stock's favorable. So this is more of an aggressive stock for more of a short-term or a swing trader. Looking at the graph, you had a nice run here over the last couple of months. What do we have here today? Who can identify what that is showing right now? Hidden divergences, exactly. Let's see. Anybody? First person, let's see. Yep, there we go. All right. Exactly. We're starting to see a bearish engulfing right now because we have today's action is engulfing the whole bar from yesterday, showing a potential reversal coming in, a strong reversal sign. This is giving us a little bit of hesitation after a great run. If you're not already starting to tighten up your stops, this is definitely giving you a warning sign right now. All right, we'll do one more for Daniel. Daniel, I'll do RN as long as you don't mind hitting that like button for me if you haven't already done so. But let's go ahead and do it. RN, last one for the day. Oh, RN. RN in what market? That was responding to somebody else's question. RN does not seem to be in the US market, or what market is that in? Let me know why you're responding to that. Let me go ahead and just answer a couple of quick questions. I know you went over Workhorse, but it has a value at 22 cents, but it's over $20. That's a huge difference. So, Robert, that's fine. That's speculation driving that price in higher. People are paying a premium to own that stock. You know, it's like a Ferrari. Does a Ferrari really cost $250,000 to build? No. Do people pay $250,000 to drive it? Yes, because they are willing to pay the premium to say they drive a Ferrari. Just because it has a $20 price tag does not mean it's actually worth $20. And that's speculation that drives that up, probably news-driven speculation that drives that price higher. People are all excited about some potential news coming out, the rumor coming out, that drives that price higher very, very fast. But then all of a sudden, what do you see? It starts selling off. So be careful with that. All right, RF. There we go. Region Financial. Hey, there we go. So Region Financial, you have about average long-term potential. Pretty consistent fundamentals though, less risk associated with it. However, right now the stock is in a slight decline over on a short-term basis. Therefore, the stock is average. It's not spectacular. It's not great. Looking at that timing, you definitely see the RT moving lower, which is giving us a little bit of worrisome signs. 3 months, you have a lot of volatility. 6 months, still off of those highs. 1 year, hitting lower highs, lower lows on a longer term basis. At $10 a share and it's free, not bad. But if you're not really trying to trade it, yeah, you got some time to let it develop. But if you're trying to trade it, this is not going to be one that you're going to be really trading right now, just because the momentum isn't behind it. All right, so with that being said, let's go ahead, wrap it up on the homepage. Right now, we're still one tick into the green. We're still mildly bullish. Therefore, we advocate buying safe, undervalued stocks that are rising in price at this time. If we go down to verify that, we can see the advanced decline still sitting at well over 2-to-1 bias, with 66% of stocks moving higher, 24% of stocks moving lower, therefore confirming or giving us confirmation that more stocks are moving higher than lower here today. And major indices are also confirming that as well. So once again, it's been my pleasure being with you here today. I hope you all have a great rest of your trading day. Have a great long weekend. Happy 4th to everybody here that's tuning in from the States. And on that note, be safe out there this weekend. Be healthy. Keep your social distancing. We don't want to have anybody sick. And make sure to be here next week at 11 a.m. Eastern as we kick off another session. Final notice, if you haven't already voted, I'm going to be closing that poll in just a second. So if you haven't already voted for what you guys want to see next week, make sure to do so. If you haven't already dropped a like on this video and hit that share button, please do so now. All that helps me get the information that I need to be able to give you guys the best info that you guys are looking for. So with that, take care. Be safe out there. Happy 4th. I will see you guys all next week. Bye for now, everybody.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.